Hello, my name is Michelle, and you're listening to Profit is a Choice. Joining me today is Susan Glass and Caitlin Raad of the Glass Group. They specialize in helping individuals and families build secure foundations and confidence using insurance. I've personally met with Susan and with Caitlin numerous times to talk about the different types of insurance and how they can be layered and used, and the benefits not only to the person, but to the family, to the employees, and to the business. So, even if you slept through your insurance class in college, like I absolutely wanted to, this is a very interesting and informative topic. So, don't sleep on this one. Every day, empowered entrepreneurs are taking ownership of their company financial health and enjoying the rewards of reduced stress and more creativity. With my background as a financial software developer, owner of multiple businesses in the interior design industry, educator, and speaker, I coach women in the interior design industry to increase their profits, regain ownership of their bottom line, and to have fun again in their business. Welcome to Profit is a Choice. Hi, Susan. Hi, Caitlin. Welcome to the podcast.
Hi, thanks for having us.
Hey, Michelle, thank you so much for letting us be here today.
I'm excited to have a conversation with you. So I know that we have had multiple conversations together, and Susan, you and I have had even more from different events and coffees and stuff. And it has just really been a pleasure for me to get to understand more and more about what you do and how you do it and how it impacts business. And I know we're going to talk about insurance in a way today, meaning in a lot of different ways. But what I'd love to start with, Susan, is having you tell us a little bit. You own the Glass Group, and Caitlin works with you. I'd love to hear a little bit more about how you got started and what drew you to insurance at the beginning.
Okay, great. Well, I will tell you that many moons ago, I've been with my company for 24 years. And so when I started, I used to be an event planner. So I used to plan parties with other people's money, which was like, how bad could that be, right? And my dad actually was in the business. So it had been in my life all my life. And he kind of lured me in and said, what do you think about this? And I felt that it was a really huge need for women, because I primarily work with a lot of women, being especially because a lot of times you have a husband and a wife, and a lot of times husbands will take on that role. And women that I have found over my career didn't know that much about the business or know that much about what they had in planning. So I just really enjoyed it and I loved it because it's relationship building and it's bringing an added value to someone that opens their eyes and opens their heart to, hey, I need to do this planning now, and then I don't have to think about it. So that was really the draw, as my dad really got me involved in the business. And he's since passed on, and I've worked with a lot of his clients' children, which has been kind of cool too. So that's how I got started.
Awesome. Caitlin, how about you?
So I got started with New York Life actually because I was formerly at like a boutique wealth advisory firm. And at this wealth advisory firm, I pretty much was pigeonholed into this role of admin or just client calling, never really being allowed to do it myself. So I got introduced to New York Life through a colleague of mine, and I was really fascinated with how much you could do with New York Life, the ways that you can go with it. And a huge reason why I personally am so interested in finance and why I love it so much is because um, I have an aunt with a learning disability. And we're kind of at the point now with my grandmother where had there been a plan in place a long time ago or even 10 years ago, my aunt's life would look really different now than what she's going to have to do. So I just see a huge need to help women and also just the community that doesn't really know much about finances and kind of making sure that everybody has a plan and nobody's forced to do something that they don't want to do at a time when they don't want to do it.
Yeah. Oh, that's a good point. You know what's so interesting? I'll tell you this, and Susan, I may have told both of you. I can't remember. Insurance was one of my most hated classes in college, in business school. And
Usually is.
oh my gosh, they need somebody like you teaching those classes because, we have insurance is the mandatory class you have to take in a full business degree. And no lie, I cannot remember the classroom of every class that I took in college because we're talking, what, 35 years, something like that, 40 years ago for me. But I can remember the insurance class because I must have been like counting tiles or something to figure out when I could get out. It was so bad. But there was an older gentleman that taught it, and it was almost like he was teaching it perfunctorily. Like, I'm here, we got to talk about insurance. He didn't make insurance exciting. He didn't, I'm going to say in my mind, he did not impart. I'm not going to say he didn't say it because I kind of don't, it felt like wah, 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 like Charlie Brown's teacher for me. But he did not impart an excitement or a power behind being able to deal with insurance. It felt more like we were auto insurance, health insurance,
Mhm.
home insurance. It did not feel like the business aspect of it that was more than like liability insurance or errors and omissions or something like that. Those types of what I'm going to call very basic business policies. I don't even remember much past that. So I'm not saying he didn't say it, but it did not lure me in and make me think, oh wow, what an amazing vehicle to either build wealth or protect assets. I just didn't hear that. I heard more from making sure that you had things trademarked than I did about for protection than I did about insurance as a protection opportunity. And so I will say that I wish I had known more earlier in my business journey and business career where to be truthful, not that there's not a good time to call and talk about it, but the younger we are when we're having these conversations, I'm going to say just like with anything, the more that is open to us to explore and to look at. Just kind of like what Caitlin was mentioning about age and getting closer and, the whole thing. Not that we don't have opportunities sometimes, but they can be limited based on our age, our health, stage of life, all the different things. And so I really wish that I had had a you teaching that class, you or Caitlin, with some excitement, because I would have probably been like, oh, my ears would have perked up and I would have probably asked about it. It's interesting because this is called Profit as a Choice, this podcast. And so we're always talking about profitability. And, as we've mentioned before, profitability is not just about money, making money. It's about being profitable with the wealth that we create, profitable in our conversations, profitable in the way that we're protecting our assets. And so insurance is absolutely one of those ways or vehicles to help us protect what we have, what we're doing, and what we're doing in the future. And these days, there's so many different ways that we can use insurance. I don't think I'm alone with the boring college. How in the world? Like, okay, Susan, I know that you got through it because of your dad. But Caitlin, do you remember insurance classes in college being like, oh, overly exciting and eye-opening?
I do not, honestly. It was more so just kind of the run-of-the-mill things, but because nobody really understands these things anymore, because different ways that the tax laws have changed, different ways that the different insurance products themselves have changed. No, you have to really be in it to fully understand them and the in and outs and the mechanics of, okay, if you do this, then X happens, then Y happens. So I learned so much of it. And I got so excited about it. When I actually was getting my licenses. Like when I actually was the one doing my investment tests, doing my insurance licenses, that's what really actually was like, there's a lot more to this than I thought. So
And
it
it's
was
like puzzle pieces that can be put together, right? I think most
Mhm.
of us think with wealth management, we're going only to our financial wealth advisor. You had mentioned, that as an organization. And that's certainly what I've done over the years. I've called my financial guy and, which is separate than my accountant, my bookkeeper. And I'm like, his name's David. And I'm like, all right, David, what are we doing here? And how are we doing that? And what are we allowing for this and for that? And how do I, invest this and invest that and think about these things? And I really wish, and there have been times where insurance has come up and been put on the table, but I really wish that it was more of a rounder conversation where there's like the financial people talking to the insurance people, talking to the business people, so that you can, I want
Well,
to say, maximize the use of all of it, because it's not an either or. It's not this plan or this plan. Sometimes it's a both and.
Mhm.
Sometimes it's an either or, but sometimes it's a both and. And just having the knowledge, like you're saying, in all the areas to even just bring it to the table to say what is the best for your situation and for your needs in the future.
Yeah. And kind of along that line, so at the like small boutique advisory firm I was at, I would notice them all the time, like the two main financial advisors. They would most of the time they would broker it out because they are not themselves like an insurance company. So a lot of financial advisors have their broker licenses and they can broker out to other companies. And it really dep and if they only are brokering out to a few companies, then you're kind of pigeonholed into what those two companies have to offer. So even just doing your research, like of course, always listen to your financial advisor, always take what they have to say into consideration, but it's not the end all be all a lot of the times. There could be other options out there. So just looking around too can always save you a little bit more money in the end too.
Yeah, or just even offer you opportunities that you didn't have. I know even with my with David, sometimes he'll say, I don't have anything for that. Let me find somewhere that you can go talk to. Just being very honest, like this isn't something that we offer or that we have access to.
Yeah.
So I do think that's a really great thing to consider. You know,
Mhm.
I
not
also
everybody can. Go ahead, Susan.
I was going to say, I also think it's changed. It was back in the day, it was always you had this impression of the salesperson that's wearing the polyester suit with the briefcase as the insurance broker, right? And now, so many like in our field, working with individuals, it is your business obviously flows to your family and vice versa. So a lot of these, phenomenal products, if you will, can do so much more than they used to be able to do. And I think that's really exciting to business owners as well as individuals planning that you would follow a certain path when you were doing your business planning where now there's so many different things that can help you in retirement just by setting them up with in your business. So I think that's for me is exciting because there's so many different it's the excitement of what that particular item that you plan for can do for you now and later. And I think that's exciting because it's not like to Caitlin's point, it's not just one thing fits all. Everybody's different. Everybody's different.
Yeah, and our needs are.
For
So
sure.
let me say this too. One of you mentioned it a minute ago that there are additional insurance opportunities coming out all the time, additional programs and plans and things. And they're
Mhm.
changing with the way that the law is allowing them to be applied as well, which is kind of like our tax code. It's constantly shifting and changing. And not only does it shift and change, but if you call somebody right after there's a Congress agrees that there's a shift, nobody knows how to apply it. Then you've got to go through a whole season of how are we actually applying this? What does it actually mean down to the nth degree here? It's not written as clearly as one would hope for just implementation. So with that said, though, I know just from my own research and then from mentioning a few things to you, there are also some, I'm going to put in air quotes, insurance opportunities that maybe are not the best opportunities. They are a little bit more, I don't want to just say scammy, but maybe they don't live up to the hype that they're being hyped to be. And I know there's been some crackdowns on some of that in the last few years. But before we start talking about some of these different types of insurance that we should start considering, or at least letting come across our radar so that we can say a yes or a no, what can we start to watch out for or look out for with regards to figuring out if something is scammy or not? I know I mentioned, Susan, I think I told you in one of our first meetings back when I worked for Dun& Bradstreet, they brought in a
Hmm.
guy that did taxes, right? Or
Right.
insurance rather. And he came in and spoke to the whole group. And then he was pretty much just signing everybody up. We had a guy that was doing wills and then another guy was doing insurance. That you I always felt like I signed up for whatever it was he sold me at the time. And I remember by the time I got to my financial wealth people, they were all like, we got to get you out of this. This wasn't the best for you. We got to
Mhm.
move you into something different. And so we made a lot of shifts and changes over the years, but I wouldn't have known enough. I did know that there was a slimy feel. And meaning just something in me was like, I felt more like he was selling me a product than selling the right solution for my business and my family.
Correct.
But I didn't know enough to verbalize that or questions to ask. Are there any questions people can ask, or where do they go to do their research just to, because they may not find a Caitlin and a Susan that they feel like they can trust with the offers that they're making? How can people start to also have their own awareness to protect themselves from getting involved in something that is somebody's trying to hawk a product versus solve a true problem?
I will tell you, I remember that conversation, and that first and foremost is if your gut tells you, you need to really listen to your gut, right? I think we
Yeah.
all are that way for sure. Um, One thing, a lot of people say, well, I Googled this or I listened to this person on the radio that talks. One thing you have to remember is that everything that you read online or things that you listen to, those individuals are talking to the masses. So again, you have to take information and go to some, I would say go to advisors that you trust. Maybe they're not in the industry, but if there's like a center of influence that you work with, or someone that maybe everybody, I can't know everything about everything, right? And
Sure.
so I have to take information and really do some research for myself. But I have a lot of clients, I'll say, well, I heard on this radio station that you should never get this and da da da. Well, of course not, because they're talking to the masses, because not everybody can do the same thing. So it's not a cookie cutter situation. And if you feel that you're in a cookie cutter situation, maybe pump the brakes a little bit and say, what is it that I don't necessarily fit in that cookie cutter, because every single person's plan is different. So I really encourage clients of mine, or even people that I'm meeting for the first time. I want someone to trust me, but I want to verify that information as well. And so I always verify it with, facts or illustrations or what have you, to show them what we're presenting is facts. Caitlin, what could you add there of research for individuals? Because I know she's the research guru that we work that I work with, so for sure.
I'm fact checking all my stuff. But
Right.
I would say, Michelle, something that you said really hit home to me was you felt like you didn't know how. Like you felt kind of weird about it, but you didn't want to miss out on an opportunity. What if
Right.
they're not here next year? And what
And
if
we're
I
also early 90s and I'm in my
Right.
early 20s, so there's no
Yep,
internet, there's nowhere to
No,
go.
right.
yeah.
Right.
Kind of stuck in a room just saying, my company brought these people in, I guess I need to trust them.
It must
Was
be good
kind of that.
enough.
It must be okay. That's kind of the situation.
Exactly.
Yeah.
So I would say a lot of the times, like your company is doing that for a benefit. There are very specific people that might really need this, but other times they may not. And something that I would really, really encourage anybody to do is do not be afraid to ask direct questions directly to that representative. How is this going to help me in the future? Are my premiums going to increase? Do I have access to premiums in this? Do not, and I know it's hard to say that up front, but even just saying like, hey, I really don't get this. Is there any chance that I could take this information home and we get on a call and you can explain this more to me when you're not dealing with all these people? If they don't have time for you to do that, it's not worth even signing up with that individual. If they're not going to be willing to answer your direct questions and not make you feel silly or stupid
Mhm.
or like you should know this already. So I would say that's a huge red flag. If somebody is not willing to bring you to their level, really understand what it is that you're signing up for. And if you're not sure, follow up with them. If they never follow up with you again, you dodged a bullet.
Yeah. I love that you said that because I was thinking the same thing when we talk about trusting your wealth management. team or trusting your accountant or your bookkeeper. It's, can I ask questions so that I can fully understand and be making a decision with full functioning ability, right? And knowledge, or do you
Mhm.
make me feel less than, stupid, dumb,
I'm just
inexperienced?
nodding along.
There's a lot of that going on all over the
Yeah.
place. And so if that happens, that should be a huge red flag because the right person wants you to fully understand. I know when I sat down and went through some of these with you guys, I was asking all kinds of questions.
Right.
I have no shame in my question game. Like, I'm going to ask them because I wanted to understand. And some of them, even honestly, we thought they might work until I kept asking questions. And then I was like, oh, that one won't work for me because this is the way it works and this is my need. And so I think it's so important, as we start talking about the individual types of policies, if people hear and they think, don't just assume it will work for you, but don't also assume that it won't. That's
Correct.
where having that one-to-one conversation and ask until the questions are satisfied. You
And
know,
I,
it's not asking one time and feeling like you got to take an answer if you still don't understand it. Ask to drill down, and the right resource is going to help you do that because they want the right product in your hands.
correct. And it goes back to Michelle, it goes back to that relationship, right? Now, Caitlin does a lot of employee benefits where she is that person that'll go in and talk with, especially with schools right now. She's doing a lot for Fulton County schools. And she has told me I mean, she's on the phone all the time at night with individuals because they have more questions. And that's, you're working, you want to be able to trust your advisor. If you don't trust that person that you're working with, even if it's an enrollment through your benefits, it goes back to just pushing a product. It's not saying if it's the correct plan for you. And so the questions is huge, huge.
I love that. All right. Well, it's now time for me to pepper you all with questions. So, so
Talking about questions,
so
right?
there we go. Well, I really wanted people to understand it's not just, we're not just talking about liability insurance and
Yeah.
Arizona and that insurance, there is a lot more at our disposal. And Susan, you brought up the point of, it's not just business insurance and not just personal insurance, that a lot of times these insurances outside of health or, whatever, there's a crossover. They feed into each other and they work together. And being able to understand that sometimes that, like you said, there are new products coming out or new ways of applying products all the time. So just
Mhm.
because you maybe investigated this 10 or 15 years ago doesn't mean it's not worth another investigation now to see what has shifted and what has changed either on your side or on the offering side. So
For sure.
um, I just want to, I know it was new for me to go back into it again and to look at it, and so much better than my college class.
It's just like it's evolved, there's so much planning that has evolved with these different companies and advisors that are working in this environment. It's all evolved. It's some exciting stuff that you're like, wow, that could really affect my business, but more so it can help my family if something doesn't go the way we plan it. And that's important.
Or even sometimes if it does go the way we planned it,
Yes, right?
right?
Absolutely.
So,
That's the goal.
so Susan, I want to start by asking you about key man insurance. Given that a lot of the people that are listening to the podcast own their own company, and that's something that we hear all the time. Talk to me a little bit about what key person, key man. I know we don't want to call key man because we're key women, but what is that insurance and how does it work? If you could give us a brief understanding of that.
Sure, of course. Yeah, I always say key person because it keeps it everybody straight. So, with key person insurance is that it's funded by a life insurance policy, and it doesn't matter what type of life insurance policy that it is. Some people start with a term policy, some people have something where it's a cash value life insurance policies. Both of them give different benefits for that key person. But Michelle, let's say you and I are in business together and you're a key employee. You run the show. It's important for me to keep you. And so in order to do that, I may put a key person policy, a life insurance policy on you that if you left work this afternoon and you didn't come back, it's gonna be really detrimental to my company. And so that life insurance policy would pay to the company. And I've even structured it where, 50% comes back to the company and 50% goes back to the family. And the company owns it and the company's paying for it. So then that way it is structured so that it gives the company money to be able to find and bonus that person, take a person from another company really to get up and start it inside my company to get things rolling again. I have a employer that I work with, a company that I work with, and he has a key person policy on one of his rock star employees. And he does a cash value life insurance policy for this employee, and he takes money from it and gives him bonuses from it, so that when he's done something extraordinary, or hey, take your family on vacation, he gives them a bonus. But more so, he's funding that. So whenever his key person leaves, retires, he's handing that policy. The employee doesn't know this yet, but he's handing that policy over to the employee to say, hey, this is accumulated. You've been great to my business, and I'm going to be great to you and your family. So it has several different ways of structuring it, and it really protects the business, really protects the business.
I remember when we talked about this one time. I've got a client that I want to send that to. Um, I've seen it used in a couple of ways as well. I've seen it used a lot in partnerships.
Yes.
So where two people were in business together, so let's say two designers and they joined and they each had a part of the company that they ran and it would be detrimental to the other if
That's,
if something
yeah,
happened or if one left or whatever, like the partnership would have a huge problem. I've seen it in that case. But what's
that's
go ahead.
That's I was going to say that's a little bit different in the sense it's still key person, but it's a buy sell agreement. And
Okay.
a lot of times the buy sell agreement has two main parts to it, where they're both key to that company. And if Caitlin and we work together, so if something happened to Caitlin, it's going to really hurt my business as well. And so there is life insurance on both of them. But that's how the buy sell, the agreement is a legal document that is really, 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 really important that people set up. And the life insurance is funding that agreement. And
Understood.
why that's important is because, the flip side of it is I've encountered good things that have happened from the buy sell agreement and not so good things. A buy sell agreement properly set up is, again, Michelle, you and I are in business. Something happens to you. I have agreed with that agreement, and I've received life insurance that I'm going to pay your husband to get your portion of your shares of that business, so that your husband doesn't have to work with me, because he doesn't want to work with me. He's not in this business, right?
Mhm.
And so then I'm able to pay him from the agreement from the life insurance, and then he's able to continue his life, and then I'm back to getting the business up and going again.
Okay.
If
So I have a couple of questions here.
for sure.
Key person, what I was gonna say too before I commingled it with buy sell is
Right.
I have a client that
Yes,
has an employee that is integral to the success of the company.
absolutely.
But my client doesn't want to start giving, it's privately held. They don't want to start giving up ownership of the company. So they are
Oh,
certainly paying this person well and bonusing this person well, but they're not wanting to like go, here's 50% of the company because the person hasn't been there from the very beginning.
yes,
They've not put in the money and the blood, sweat, and tears, but they put it in some of the later years, but it's not the same. They don't want to give that up. Key person insurance is a beautiful example of how they could be building into that. And then, like you said, give them
absolutely.
something when they walk away. So it's something that it doesn't just have to be for the company. It could be for the person, like the way that your client is going to use it. So I could see that being almost like that the answer to I'm not giving you a
Yes,
part of a privately held one person company, but here's the way that I can take care of you for staying with me as if, because certainly that policy is going to be funded based on the profitability of the company. So the more profitable you make
absolutely.
it, the more I'm going to fund it, the more you're going to get it at the end.
Absolutely. It's kind of like golden handcuff, you
That's
know?
exactly right. Yep,
Mhm.
yep. And sometimes we don't think that we can do that as small business, and
Yeah,
and
you
we can.
definitely can.
There's
Mhm.
a potential for that. On the buy-sell agreement, one of the things that I made a note of is I've worked with multiples and even had a business myself where we had our operating agreement. So we knew who could buy out from who. We knew, like, right, that very contracted operating agreement that said if we could work with the husband or the wife or how much longer we had to buy somebody out, somebody had to step out of the partnership. What we did not do was do a policy around that, which
Right.
when you said, you know, let's say that something happens to the partner and you're having to buy out from the husband because of the way that the agreements are done, you may not have cash available just on your own.
Absolutely.
But if there's an insurance policy to help you do that,
Oh,
then
yeah.
it right. I just had not put those two together. And
Hmm.
I say that because sometimes people hear buy sell agreement, they're thinking operating agreement. Operating
Correct.
agreement just tells you how you're going to do it, but the buy sell agreement helps provide insurance to allow you to do it the way you've contractually said you're going to. Because ours went as far as this is how we're valuing everything. It's going to be valued based on this date and based on this methodology, and we'll be paying back at this type of a rate. Like our operating agreement went pretty far to explain it.
Yeah.
We just had no support, so that if we'd have had to cough up the cash, we wouldn't have had it.
Yes,
And
the
there,
life insurance, yeah, it's just funding it for you. And
that's
it
right.
goes back to that pennies on the dollar, right? So, um, because in the fact that you don't necessarily, it's when someone's passed, it's rocking everything, right? It's rocking everything. So then now you're writing out of the business account to pay this spouse, and that spouse has the right to come in and say, Michelle, I don't like the way you're doing this. We want to change this. And it just keeps it clean. And so many people do the document, which is fantastic, but the life insurance just gives you the money to fund it, and
That's
it's
right.
easy. It just makes it easy at a really difficult time.
Yeah, I
Very
didn't
difficult.
even know that one was available, so I love that.
Hmm.
Let's talk about collateral assignments. You had mentioned that. Tell me
Yes.
what that is.
A collateral assignment, a lot of it doesn't even necessarily have to be someone a new business, but a lot of times a new business or a business that needs capital and they want to take out an additional loan of some sort. A lot of times banks will say, that's great, but we need to have something collaterally assigned. Majority of people immediately think their home or they think their business that they're going to put up as collateral. Well, insurance companies will now allow for a life insurance policy to be collaterally assigned to that. So, because let's face it, banks do not want your homes. Banks want you to continue doing very well and take more money from them so that they can pay you, they can charge you an interest, right? That's how we all make money. So with a life insurance policy, you can have a life insurance policy on yourself and you collaterally assign it to the bank for your business loan so that in the event something happens, the loan is paid off and the life insurance company pays the bank to pay off that loan. And then if you've paid off the loan and you're still living, which is the goal here, we're not looking for everyone to die, then they release the collateral assignment on the life insurance policy. But it's just a very easy, clean way that it keeps it separate out of your assets. And it's just a simple for the life insurance company to deal with the bank and assigning that loan that it's going to be paid one way or another.
That's awesome, especially when we're talking about smaller businesses that might
Yeah.
not have a huge amount of collateral behind them, or for whatever reason, they don't want to put up their home or something very
Mhm.
personal. They want to keep business separate. They could
Yes.
always have a policy through the business and then they just assign that.
Right, right, absolutely. Because it just keeps it separate from your assets, and you have your own asset of your life insurance policy assigned to that. And you even if you have an existing life insurance policy, you can still collaterally assign a portion of it based upon what that loan amount is. So it's not necessarily that you have to go get your a new
A
separate
separate,
one. Right.
sure.
You can just assign. It's just a paperwork process at that point.
I love it. So it's just saying,
Mhm.
bank, you're going to be made whole in the case that something happens.
Correct.
And then when
Correct.
you've made them whole on your own, they just release that assignment. It
Yep.
comes back to you, and now it would follow the normal path of what the other assignments
Mhm.
are as part of it to the beneficiaries or whatever's going to happen.
And it's just today with the way it's sometimes difficult to get loans from
Yeah.
banks or businesses. It makes it a very banks are very open to saying, there's a collateral assignment to a life insurance policy. They like that because it's kept separate. They
Well,
don't have to go after your house.
yeah, and what I also like about that is when you think about these businesses that are just starting, that maybe
Mhm.
need a business loan to be able to get off the ground or to open a brick and mortar or do whatever, and they
Yes,
don't have that cash or those years of history in business, but they do have life insurance policy that could be assigned.
absolutely.
So it gives them just a little bit more flexibility to do that. I love
For
it.
sure.
I love it.
It's great. It's a great, easy way.
Yeah. So, Caitlin, question for you. So, I know that Susan had mentioned, and you mentioned that you work a lot with companies, and I know we've had those conversations, especially since when we met the other day. We're back to school season, and so getting back in with all the educators. But I'm curious if you could talk for a little bit about some of the benefits to using different types of insurance to retain employees or to provide additional benefits for employees for any of our businesses.
Yeah. So something that is, of course, amazing when you're with like a big company is you get life insurance and you get probably a decent amount of it. Maybe you get one times your salary, maybe you can get all the way up to $1 million, and it's pretty cheap on the dollar. There's a reason that it's cheap on the dollar and you're getting so much coverage. It's because you do not actually own that policy. Once you leave that company, all that coverage is going away. Your company owns that policy, not you. And it's also usually a temporary policy. So, meaning at a certain point, these premiums are going to start increasing or coverage is just going to fall off entirely. So, obviously, for a short term, God forbid something happens in a short term while you're with that company, it's really valuable to have that there. But after all this time, like my dad is a great example. My dad's been with the same company for like 25 years, and he's kept everything internal at this company for the last 25 years. So his life insurance, his disability, everything is wrapped up in this company. Well, now my dad is in his 60s and he is thinking about starting his own company. But my dad still has four kids that are, relatively young. So it's pretty hard for him to walk away from $1.7 million dollars of life insurance coverage because when he leaves, the only thing he has outside of the company is $100,000 that he just started a couple years ago because he realized he had to. So I like to help people avoid getting in the situation where, oh my gosh, I have no benefits now that I'm retired. I have nothing to leave my kids. I've paid into all of these things, and all I have to show for it is my 401k now that I've left. So, as a small business owner, something that you could do that really would help your employees is not just giving them temporary, but offering a permanent option. And a permanent option that doesn't matter if you leave the job, that policy's following you. The premiums don't change, and it's going to keep growing. And you have access to the premiums that you've put into the policy, which is pretty cool. And something that I also really like about this is why do people like going through their employer? No medical. There's no medical a lot of the time. They don't have to worry about going on their own and getting blood drawn, having their urine tested, looking up their DMV record a lot of the time. A lot of people don't know that, but if you've got a DUI or a super speeder on your driving record, that's an automatic decline if you were to try to apply on your own. So when you go through an employer, same thing with this. This is it would be a guaranteed issue, permanent life insurance product that the employer and the employee, or the employee, I'm sorry, they never have to answer a single medical question. So
That's huge. That's
it's
huge.
huge. It's huge for a permanent policy. For a permanent policy, that is huge. And another big thing about it too, I was working with some teachers the other day. When I told them about this, they were like, "What?" Because I went into the school and I was telling them about the offer. And I was like, the best thing is, I don't care if you guys smoke 5 packs a day. You're gonna get a non-smoker rate with this.
Because it's going through a full company policy.
Going through a full company. So, and those smoking premiums are not pretty. They are not pretty. So, not only no medical questions, even if you have something that is personally with you, like you're a smoker, you're not going to get penalized for that. And even when you leave, you're not going to get penalized for that.
The thing that's going through my mind with that, Caitlin, is the world post-COVID, because so many people post-COVID have had health issues arise that they did not have prior to COVID. Not saying they're all COVID related. I'm not saying that, but I am saying there has been a lot more on the uptick that we've heard about or that people are experiencing, or out of the blue stuff, or cancer at super young ages.
Hmm.
We're seeing all kinds of things go on with that. So to have the benefit of an employer program, which is what the employers were trying to do in the first place, but then the additional benefit of being able to carry that with you when you leave, um, versus you have it and then it's gone, because they're just covering it. They're almost covering you in a minute way, like key person. Like, I'm just going to cover you
Right.
while you're here, but when you're gone, you're gone.
Yeah.
And so to see the benefit of all of that is really big. And, I'm diabetic. We've talked about that. So I've got all kinds of, autoimmune health issues, which the older you get, thank goodness I got great life insurance and all that when I was in my early 30s, late 20s, before everything had reared its little head. But, if I went now and tried to get something on my own with all of my health issues, we know I would not get through most underwriting. It just wouldn't happen because of my health issues.
Yeah, for
What did you
sure.
say, Caitlin?
And if you did get through, it would be so expensive, it's not even worth it at that
It's not
point.
worth it at that point. I do better to save my money and
Exactly.
invest it somewhere else. So I do think that's where we had talked about kind of the age. But so you're saying, if I'm understanding you correctly, as employers, we have the ability to offer a similar type of program to our employees.
The exact same thing. So, as an employer, what I like the most about it is it doesn't cost you anything to just offer this to the employees, just to give it as an option, because we never know what's going on behind a closed door for a family. So I like to tell the story, and it really illustrates the point of we don't know what's going on. When we opened up an enrollment in DeKalb County, a very young teacher approached us and she was like, "Hey, I'm perfectly healthy. I'm fine, but I've got a situation going on at home. My husband is in hospice and he already has stage 4. He has stage 4 cancer. We don't know how much longer he has. Does this still apply to him? See, if I were to get this, that qualifies him to get this. What does that look like?" So we were able to issue him a full $50,000 policy, no medical questions. It did not matter that he was already in hospice. The family made one premium one time of $200. 10 days later, he passed away, and the family got a full $50,000 payout. And that was their only coverage on him. So this is going to be something that's very important for employers to know a little, if they know a little bit about the family, if they know that there's certain health conditions going on, if they know that someone can't get it on their own, this doesn't cost them anything to be able to offer it. It's completely voluntary and it follows you. So it's not only the employee that gets covered, which is cool. So it's the employee, their spouse or domestic partner, their children, and their grandchildren that
Mm.
are all eligible. And I think this is really powerful. I think about my aunt a lot and how different her life would have been if my grandparents had done something when she was young. When she was young, before anything happened, anything really happened, before they
Right.
would have to get questioned medically, she would have a whole pot of money set aside for her that wouldn't have interfered with her government benefits, which is the cool thing about this too. Um, and so when you're young, so especially kids with special needs, they can get these policies guaranteed, and that may be their only ever opportunity to ever get a life insurance policy.
Let me ask this. How many employees does the company have to have to be able to?
Question. Great question. So for the guaranteed issue, for no medical questions, no exams, no nothing, you have to have at least 25 employees. They've got to be a W-2 and they have to be able to receive, they need to have paid time off. It's the only thing. The only three things that we need to be able to open an enrollment, and anybody that wants something can get it. If they don't want it, don't get it. If it doesn't work for you, if you already have a bunch of life insurance outside of this, don't get this. You don't need it. If you want it, here's
So it's not going to work for the smaller businesses that have 5 and 10 employees, but for those that are 25 and up, like you said, that are W-2 with time off, meaning they get vacation time or whatever.
there is a simplified issue. So for companies that have less than 25 employees,
Okay.
the reason that it changes is because now we're taking on a little bit more risk because there's not as many employees to kind of fill out this risk bucket. So when we have less than 25 employees, it's a simplified issue. So
Okay.
it's limited medical questions. There's
Okay.
still not going to be an exam, but you may have limited medical questions when we go less than 25 employees.
Okay. And that makes sense. Okay. Awesome. Is there anything else that you can think of as an employer that could be offered to kind of make it worth it, or any other ways that we can use insurance to make it excellent for the employees or to retain them in some way?
Yeah, so I mean, we don't obviously it's not just life insurance. There's also other disability programs that business owners can look through for like their short-term
Oh, yeah.
disability and long-term disability. You know, a lot of times I feel like business owners, you got so much going on. We need to focus on one thing at a time. We're not trying to switch insurance carriers right in the middle of our busy season, or we've already had this person for so long. You know, it might be worth taking a look at different types of companies to give out different types of disability insurance, like short-term disability. Long-term disability is a huge thing. A lot of companies don't provide long-term disability. We just have short-term. So getting a conversation in about a little bit more of a longer-term plan could also be really beneficial to the employee because, of course, if you're disabled for a long period of time, you don't want to have basically a clock saying, well, your money's going to run out in about a year. What are you going to do? So having that conversation, I think, is really important as well.
I know that's what some of the bigger companies do. So just trying to think of how do we take some of the offerings of the larger companies and bring it down to the offerings of the smaller companies that would make people want to work more in a smaller, more flexible environment.
Yeah.
Um, I'm curious. I know we're going to talk about long-term care in just a second with Susan. This is for both of you, though. I know that you and I have all talked about like 529 plans. So a little bit more on the, I'm going to say the personal side, but on the business slash personal side, we've talked about 529 plans that the government makes available, and the way that that's been shifting and changing. But I'm saying that only because there's also insurance opportunities that might work with or in place of a 529. Not again shaming a 529, just saying there are other options that we don't always know about. Because I know a lot of the business owners are working so that they can pay for college, so that they can pay for, the second beach house, or they can pay for some of these other things. But college comes up over and over and over because of the expense. It's gotten so expensive. What is just at least a couple of sentences on one of the programs that can also be used to help fund college or to do something, so that if they were to ask you about it or talk to somebody about it, they would know what to ask about?
Yeah. So I would say with a 529, what's the purpose here? We're trying to put money away for maybe in the next 20 years. We want to take it out tax free and we want it to grow in the market. That's why we're putting it in a 529 because it has similar implications, almost like a Roth IRA, because you get to pull it out tax free. So depending on your goals, a 529 could be great, but what if your kid gets a scholarship? What if they end up not wanting to go to school at all? That money is really, really locked away for school expenses. You could always pass it down to another sibling if that sibling doesn't go to school or something like that. There are options, but the money is a little bit locked up, a little bit tighter than maybe, especially nowadays, with we don't know if your kid's going to be an influencer, a travel blogger. You know, there's so many things. They could want to start their own business. And a 529 is not going to help them do that. So, another alternative would be using life insurance as a really similar asset class because you can put money into a life insurance policy. You can have those premiums invested in the market. And because we've wrapped that account in life insurance, you can take out those gains tax and penalty free whenever you want and for whatever you want. Let's say 20 years goes by and there's $100,000 in this account, and your kid has a scholarship or they want to start their own business. Let's take the business, for example. They need $50,000 because they want to take a loan against themselves to start a business. You can't do that with a 529, but you can do that with life insurance.
So, you know what's so interesting about that, and we've had that conversation, and the 529s are changing all the time. Like all of these products are changing all the time, just to be fair.
Yep.
And how you can use them and how you can't. And like the fact now that you can use the 529 for private school, because I think they're getting the 411 that as strictly tied into college is might not be the answer for everybody. So I know that all of these are shifting, and I want to be very fair to that. But I would also say these again, this is one of those that goes back to me that it doesn't have to be an either or. It can be a both and. We
Mhm.
can invest some in a 529, especially with some of the expansive use of it. Like for I even saw the other day, I think I told you, and I need to research it again, but it was like you could use it for childcare. Well, even if I'm not planning, to your point, Caitlin, to hold it for 20 years for college, I'm just trying to put it away and use it almost like a Roth and be able to get it tax free to cover almost like an FSA type account
Mhm.
some ways, like non-medical. But even just being able to do that, I could then also have that life insurance policy that I can be using for these bigger things that are way outside of the use of a 529, but could still impact my child or grandchild in an amazing way as they age and they grow older. So I love just being able well, like when you all were explaining all this to me, I was like, oh my gosh, especially because I've got grandkids and we're already putting in 529s for them because we had 529s open for our kids. There was a little bit left over in their accounts. So we just rolled it down to their first sons. And my
Mhm.
husband and I are still just putting some money in there just because it was already open. It was too easy to just not do it, right? But then to think about what if we were to help layer on something else like that, that's fascinating to me. And when we're talking about, there's a lot of conversation these days about building wealth. Building wealth isn't just about making the money and just putting it in your bank account and saving it and hoping that it grows. So being able to create an insurance policy for our children while they're newborns and just letting it grow until they need it, until they're ready, like that is a wealth machine that most of us don't even think about. And to get in it when they're so young is so inexpensive compared to trying to get in at 60 years old, where it's not even the same ball game. So I wanted to make sure that we touched on that because I thought it was so intriguing.
And
Um,
one other, Michelle, if I can, one other point
yeah,
that I want to put on when, because again, like you said, everyone's different and one bucket is not necessarily better than another bucket. But using a Roth IRA as an example, as a reason why someone may want to consider putting more money in one bucket than potentially another is because Roth IRAs have limits. There's contribution limits, and of course, there are income limits that don't even allow you to put money tax-free. Yes, of course, you can go through the backdoor IRA and you can do all that, but even that still has restrictions. When you're using life insurance with these types of accounts, you make your own restrictions. You make your own rules. There is no, oop, you've already put in $7,000. I don't care if you made $1 million this year and you want to shove $20,000 into the market and get it all out tax-free later. You can't do that. The only place that you can do that is with a life insurance contract where you can pump money into the market and without any limitations and still get it all out tax-free.
that's amazing. That's why I love the layering of it. See, I would have been excited in insurance class if they had told me how to make and save my money. It's again, it's more than just making it and looking at it at the base
Mhm.
dollar value. It's how are we investing it in whatever way we're investing it, and then a layering approach. That's why I think again, going back to the comment that we've all made multiple times, it's not a one size fits all. And so
Oh,
if you're in that room and it feels like it's a one size fits all, I mean, I always laugh when I pick up things that are one size fits all. And I'm like, I know people this will not fit. Like, I
Yeah.
just know it. So I don't know why we're saying it that way. But being able to say, here's where my family or my business or both currently are. This is what we'd like to plan for. This is what we'd like to dream and hope for. This is what we'd like to protect. Gives you the ability to kind of, and maybe this is what our health situation, our age situation is. It gives you a chance to look at the whole picture to figure out which products or layering of products works best in that situation.
And I think a lot, and just to add to that, Michelle, I think a lot of people, this huge mind shift over the years that, we're talking a lot about different, how life insurance can play in different roles. There's so many more living benefits to it than just dying benefits. And so, we
Oh,
have
that is
clients
a
that,
really good point.
oh,
Really
it's
good.
true.
Because I think in the past, we always thought, well,
It's
what's
just
it
when
going
you
to do
die.
for me? And honestly, sometimes we were told all you got to do is get enough, like based on your age, to just cover your funeral.
Right.
Or at one point, it was get enough to cover you for a couple of years because your kids are still young and somebody's got to step in and do your role. But you didn't hear as many living benefits.
Benefits.
And
It's true.
that is a huge point, Susan. Thank you.
Yeah, because if I sat here and explained like all these things and said, this is how this does and this, it can do this, this, and this, people would be like, oh my gosh, what is that? And how much can I get? And the moment I say it's life insurance, people are like, eek, because it's a mind shift of looking at the living benefits to things, not just the dying. And I think that's a really,
The way
both
health
sides.
insurance works. I mean, health
Right.
insurance for the
Uh,
living is not
that,
the dead.
exactly. 1000% for
Well,
sure.
I think that you're fighting against some of those old insurance salesmen out of their car where it was mostly death benefits and it was eeky and squeaky and
Yeah,
gross.
yeah.
And
Used car salesman. Yeah,
yeah,
absolutely.
yeah, it
That
really kind of is.
feeling. Yeah. Yep.
Susan, let's talk for a minute about long-term care and tax
Mhm.
deductions with long-term care. How does that work?
So, as
A
business
big
owners,
question these days. I mean, how many
yes,
55 and up communities are going in, and then 65 and up, and then assisted living, and then long-term care? I mean, like we're living so much longer, and we're seeing these pop up everywhere. I mean, I know in my age range, I'm kind of in that sandwich age where I've got kids and grandkids and then aging parents. I
yep,
know, Susan, you're talking about we're in similar places in life. And it's a conversation. This conversation of long-term care is coming up all over.
all over.
It's like all of
Mhm.
our girls' days, and outside of menopause, every other thing is long-term care or aging parents, and how do we
Right.
support and help them and get them whatever they need in their last days? Kind of the things Caitlin was hinting about earlier.
Yeah, absolutely. Even though we'd rather just talk about our grandkids, right?
Exactly.
So, so as business owners, we're always looking for a tax deduction. So I'll start there. Um, Long-term care, whether you own a business or not, is a tax deduction of your premiums that you're paying. Depending on how your business is set up, it can be 100% tax deducted. And as individuals, there's age limits based upon what you put into your premium. Long-term care is huge right now. It is, the cost of care with health insurance goes up. The cost of care for people needing basically long-term care is when you are at the point that you lose two of your daily activities. And I
Mm.
usually think of it the first 20 minutes in the morning, bathing yourself, transferring in and out of bed, feeding yourself, or if it's cognate, that's everything. It's dementia and Alzheimer's is an all-time high. So one thing that, again, it's not a one size fits all. It is a conversation. It's a several appointment conversation. I have more and more clients that, it's a process because there's so many. It's kind of like building a ice cream sundae. You can put a little sprinkles here and a little chocolate here, and it just can go all the way up. So it's building a plan that fits your clients and protects, really, you're shifting some of the risk to the insurance company to protect wealth. It's going back there again to protect the wealth of what you've worked so hard for. One thing that a lot of people are, especially on the East Coast, aren't aware of that's coming across the United States is right now in Washington State and California, the government's really trying to get more and more people to take responsibility of their care, of some sort of long-term care plan. And Medicare and Medicaid is not the plan. That's not the plan. And so Medicare will not pay it. It'll pay for 20 days in a nursing home. Medicaid, you have to lose everything and give up everything in order to have any kind of government assistance. And so right now in Washington state, and I believe California is now on the list, you individuals are being taxed somewhat like the Affordable Care Act, that if you did not have health insurance, you were paying a tax for that. There are different states that are trying to get that approved. Washington state is huge right now that individuals are looking at long-term care so they don't get taxed. And you know what? I had a mother that for 20 years we took care of her. She had MS and she did not have long-term care. She was 44 years old and my dad was in the industry, right? So, but she was 44. And you always think, just like Michelle with
I
you, with
have
your daughter,
time.
you always have time, right?
And
And
all of my health issues hit when I was 44.
yeah, so it's, you think that that's, it's going to be fine. Because you're not supposed to get sick. You're not supposed to, anything's not supposed to happen. And it really, it took everything of my dad's assets. He had his house left that he was trying to sell to take care of my mom, and it's a family issue. And I look at it with my kids and my grandkids. I want them to visit me instead of managing me and taking care of me. So it's just something, and everyone always has it goes back to the living benefits. it Long-term care can be expensive, but it doesn't have to be expensive. So what you hear out there is, oh, it's so expensive. It's so expensive not to have it. So just have a conversation with someone about it. But the tax deduction's huge for business owners, and we're unaware of it.
Yeah, I know my grandmother had Parkinson's. Well, both my grandmothers had Parkinson's, but
Yeah.
hers had gotten worse to the
Yes,
point that she had to have care. And there was a lot of what I'm going to call asset management to
for
make
sure.
that possible for her to get care without losing every single thing. And it was a lot of it was family pay. So she saved and we had to pay out of that. Um, Thankfully, it wasn't exhaustive, but that also
Right.
means that unfortunately we lost her before
Right.
it could be exhaustive because it would have been exhaustive. It would
For
have been.
sure.
And so
And there's
it really makes you think about that.
absolutely. And just like with life insurance and different investments, and there are different types of long-term care. We hear a lot of times that, I don't want to pay premiums for the rest of my life. There are they're called asset flex plans where you pay into it as a lump sum or over a 10-year pay, and it has life insurance associated with it. There are a million different plans out there. Again, it's not a one size fits all. And once sitting down, and talking with clients about it and finding out what their needs are, then we kind of put together some plans and some options and say, we're going to educate you, but you ultimately have to make the decision.
Yeah.
So,
And, I think something to consider is, and I don't know how those plans work, so that'll definitely be a conversation that we'll have. But, it's a pay me now or pay me later situation. It is really
mhm,
what it is. And I love how you said it's about protecting wealth, meaning I want to be able to take care of my husband or take care of myself, but I don't want to lose our house and everything else that the other person has to continue living in while they're taking care of me. It
right,
was kind of like it's going to sound silly, and I don't mean it to be a weird analogy, but it was like when we sent our kids off to college, our comment to them was, we don't want to have to literally sell everything we have so that you can live off at college. So our standard of living can't, I mean, we're willing to adjust it for sure, but
absolutely.
but we're not going down to ramen every night so that you can go off and have a great college experience. Like that's not
Oh,
going to happen.
I,
And I
I say,
say that's the
yeah,
same kind of way here, right?
totally.
You don't mind adjusting your lifestyle somewhat to help take care of the other person, and we don't necessarily think it's the need of the government to take care of each of us individually for something like that. There may certainly be assistance, but we're not, this isn't, somebody's got to help pay for this. And
Absolutely.
finding the best way to do it that is the least disruptive, that is the most planned for, is the goal.
Absolutely. And it's, I say to clients about college funding is we can get loans all day long for kids for college. We cannot get a loan for retirement. So same thing with long-term care. You're not going to be able to cover the entire risk, but shift some of it to the insurance company. The insurance company will support that. And if you're having some of that, the funds coming back to you to take care of your loved one, we could set it up where some of it's being offset by Social Security and all that. So it's keeping all the money that you've grown and you're able to take that retirement income. It really protects that wealth, as well as with some of these plans that have a life insurance policy. It kind of puts that money back in that you've used, so that you're back to whole, that your spouse would want you to be, to take care, that you can live as well, that you're not having that burden of that money going out the door. Because it is, I say to clients all the time, we can pay $200 a month now or $200 a day later. You just, let's decide. Because that sounds really harsh, but that's the reality of it.
It
It's
is. It
it's
is.
running
It's a
about
insane
$200 a
piece.
day. Yeah,
Yeah,
extremely
it's
expensive.
crazy expensive, and it's
Mhm.
getting more and more. And the
Yes,
longer we live, and then, all the things that are continuing to happen, you just hear about more and more.
yeah,
So,
absolutely.
ladies, is there anything else insurance based that you think we need to touch on before we wrap up?
I
There
don't.
was there was one other thing I wanted to touch on with
Yeah.
that other type of long-term care that Susan was talking about. It's the more flexible type because
Okay.
not every long-term care plan is the same, but some of them are really phenomenal if you have the assets for it. And let me make that clear. So, just a very quick example. Let's say a business owner has $100,000 that they made that year, or $50,000, $75,000, and they want to do something a little bit more leveraged, a little bit more value add with that money, not just have it sitting on the sidelines. We don't want to throw it into the market. We don't want to risk it. What else can we do with it? So let's take an example of a 55-year-old woman. And this is a real example. She just made, and let's keep in mind, long-term care can cost up to $200,000 per year, however long you're doing it. It's very expensive. So let's say she pays one time $100,000. She never puts another penny in this account for as long as she lives. She's done. Not only does she have a permanent protection of life insurance, so let's say she put $100,000 in, and then she passed away the next day, never needed the long-term care. Her family's getting $224,000 back in life insurance. So with family's already up, even though she never got to use the policy. Let's say she gets into a car accident, right? The day after she gets this policy. That $100,000 investment has bought her over $600,000 of long-term care funds. So it's really that leverage that we're looking at. And let's say in 5 years, she never wants to look at this policy again. Let's say I have a huge financial need. I need my entire $100,000 back. There's no taxes or penalties. So not only do you get the long-term care, not only do you get the death benefit, but you also have a full money back guarantee. So this is a very specific type of long-term care. Not every long-term care product works like this, but it is probably one of the best plans there for those who can afford it.
So the nice thing is there are multiple options within these categories, which then
Mm,
goes back to Susan, where you said this is a 2 to 3 appointment conversation
for sure.
because we're trying to really parse out the deep need, not just a stated need, perhaps, so that
Yes.
we can find the right plan and the right mixture. So, Caitlin, thank you for explaining that. You know, but I'm going to ask this question real quick. On that long-term care, is that one of the, can you get long-term care plans without going through all of the medical stuff, or did those have a medical component to them?
So long-term care is going to have a medical component to it. So it's usually the bit as you get older, the biggest thing they're going to do is they're going to do a cognitive exam on you to make sure that we don't already have some memory things going on. So that you would be subject to a cognitive interview and a few medical questions. Unfortunately, just an example for my poor dad. I tried to get my dad long-term care. I put him through with two different companies, and my dad bikes like 100 miles a day. He thinks of himself as a little Fabio, like he's in great health, like nothing is wrong with him. But his medical history got looked at, and his medical history from like 10 years ago got him declined. So the earlier that you really can get this, the better.
Okay. Awesome. Awesome. Well, ladies, this has been extremely informative. It's so funny. I know we've had a couple of these conversations. I learn more and have more awareness every time. And I think that just goes, not that you guys haven't explained it well the first two times. That's not what I'm saying. But I think it goes to the complexity of it and
Hmm.
to the different ways. Because every time we talk, it's like, oh, there's another angle. Oh, well, what about that? Caitlin, kind of like you said, when you were going through your testing and doing that, your eyes kind of came open and the light bulb came on of all the different ways. And I think it is truly fascinating how insurance can be used and how underused it is for
Hmm.
many of us in our lives and in our business. And so I'm thankful that you took the time today to share your knowledge on all of these. Susan, if people are looking to get in touch with you and Caitlin, and where can they find you and what are their
Well,
next steps? What do they go do now?
Well, I will tell you, we both are on LinkedIn. And I know in the show notes, you'll put our email addresses and so forth. Caitlin and I would be happy to sit down with anybody for a free consultation and just kind of talk to your listeners, find out some different questions and see if there's something that we can help them with. And if not, we can refer them to who they need to talk to. But Michelle, we thank you so much for having us on today. We always enjoy talking with you. We always find different things to talk about. So we really, really appreciate it. Thank you.
You're welcome. It's so funny. I kind of like, again, I wish I'd met you 20 years ago before I was 44 and had all my issues. But I love that there's still things that I can do for my family. Like, even if there are certain things, and I'm so thankful that we got all of our life insurance and all of that when we were in our late
Yes.
20s, early 30s. I'm glad that we at least were introduced to what was available at the time so that
Hmm.
we have coverage. But it's scary these days to not have any coverage. And I've seen that. And I want to just end with this. You guys had talked about it's easy to put it off. And, in fairness, when you are a young couple or a young person, you don't always, you're not thinking about your mortality. I remember I was 21 years old and I started my first corporate job here in Atlanta. And the very first day, they sit you down and give you all those forms to fill out.
Yes.
And one of them was like who my beneficiary was and who was I. And I was like, I'm not dead. I'm 21.
Right.
People like
Right.
it weirded me out. I went home and called my parents and I was like, this was I mean, it was disturbing to me. It
Right.
had to be done. It was an adult thing to do, but I wasn't prepared at 21 to start thinking about the end of my life in a formal setting at work. However, what I will say is the more those conversations happen, the earlier we are, the more that we can invest and be prepared. And things are happening these days that are not waiting till you're 85 and 95. We don't know what's coming. We don't know what's going to happen. We don't know, we just don't know all the things. And so the
Mhm.
more that we can anticipate and put things in place, and I guess I'm excited that a lot of the newer products that you have those living benefits. And I think that's what threw a lot of us back in the day is there were very few living benefits. And if there were, you didn't hear about them. You heard everything was about a death benefit. Everything was about if it all went wrong,
Wow.
not if it
Mhm.
all goes right. And so I think that's just a refreshing way to know that there are opportunities out there to invest in insurance that truly is an investment, not just a protection. So thank you for bringing that conversation to the forefront today. Very enlightening.
Well, thank you. We appreciate it very much.
You're welcome. All right. Well, I will put your information in our show notes and thank you for the offer of a consult to our listeners if they give you a call. And, I'll still be in touch. So I
Yeah.
appreciate your time today.
Thank you.
Thanks, ladies. Susan and Caitlin, thank you so much for joining us on the podcast. You know, the idea that insurance is not only for death benefits, but living benefits was truly a huge eye opener and such a great statement on how insurance can be used today. So, those of you listening, if you want to talk about, if you've got a need or a want, something that you need to protect, please reach out to Susan and to Caitlin and take advantage of their offer of a free consultation. And as we're wrapping up the year and planning for 2026, hopefully you're all starting to really look at your strategy for the next 1, 2, and 3 years. And so mark your calendars. You can join our strategy coaching course that begins in January. And we can make insurance oversight part of the task that you need to accomplish, really looking at how does insurance fit into the company that you're building and the wealth that you're creating. So you can find out more about our courses, our coaching, and working with us by going to scarletthreadconsulting.com. Remember, being profitable and sustainable doesn't happen by accident. Profit is a Choice is proud to be part of the designnetwork.org, where you can discover more design media reaching creative listeners. Thanks for listening, and stay creative and business minded.